On tonight's property panel, we're discussing the market itself. Where is it at? Some people are saying we're still in a property bubble. Others say we're headed for another boom. Joining me from Fletcher's Real Estate, Tim Fletcher.
Thank you.
From Infolio Property Advisors, Cameron Deal.
Des.
And from Empower Wealth, Ben Kingsley. And well done, Cameron. First cardigan we've ever had on the panel.
Thank you.
Great work.
I hope it's the last.
Especially for you today.
I think it's very good, Tim. Get with the modern program. All right, kick us off, Ben. Where are we? Can you give us a state of play for the real estate market at the moment? Because there are a few conflicting reports out there.
There are, Des. What we're seeing with interest rates low, affordability raises. Now, when affordability raises, we get some momentum into the market. Now, when this happened last time after the GFC, we basically saw a rush in values and certainly the Melbourne market took off and we saw some fantastic growth in the Melbourne market. And it was a bit of that sort of rising tide lifting all ships. This time around, it's different. It's selective, there's pockets, there's pent-up demands in areas, but we're certainly not anywhere near a bubble. And I don't think that's the case in any of the other Australian markets. But we've got to be mindful. Lower interest rates, people think that they could afford it. If the momentum continues and we get this sort of sentiment and frenzy as if I'm going to miss out, we could go near a bubble. But the RBA are right on top of this, and I don't see any sort of change. I don't see any sort of them sitting on their hands, so to speak. If they see the property market doing what it's doing, they'll raise interest rates.
And do you think people are becoming a bit better informed, Cameron? Do you think they're not as, I guess, lemming-like when it comes to everyone jumping in at once? Do you think people are getting a bit better educated about this?
Oh, no, there's still the herd mentality out there, often, and we're seeing that with more investors coming into the market now. The audience will probably expect us to say that we're not in a bubble. The fact is no one knows whether we're in a bubble or not. The jury's out. There's views against and views for, of course, but I'm not going to die wondering and waiting to find out whether I'm in a bubble or not. I'm going to continue to buy property, and that's what we're finding investors are doing at the moment. As Ben said, the interest rates at the moment, obviously being at a low figure that they're at the moment, is driving the market in some respects. But I think we also agree now that we're not going to fall into that black hole that everyone was thinking about, 12 months ago, doom and gloom, and we're seeing some confidence return to the market. Interest rates, of course, drive that, but there's a little more confidence starting to filter back in now. But a lot of our investors that are coming on are a lot more sophisticated than potentially what they were maybe 3 to 5 years ago, and they're a lot more selective about the type of property they're going to consider investing in and paying good money for.
All right. Tim, at the pointy end, you're out there in the field. Do you concur with what the guys are saying?
I do. I think you've made some very good points here. The herd mentality, it really intrigues me about this, It's almost as, and I've said it before, and I'll say it again, it's almost as if people go to a big dinner party and they all go out the next day and do what has gone down the big table. It's quite intriguing. But I think people are becoming more educated. They think they're becoming smarter. And the last thing we want is for every segment of the market, wherever you are, to go gangbusters, because that's not a healthy scene. A lot of the journos, a lot of the commentators, and I'm not to say that there's not some very responsible ones there, but they're all looking for a beat up or this. It doesn't work like that. It's a much more sophisticated market out there when you look at all the elements of it. The first home buyer, the inner city ring, the investors, the mums and dads buying and selling. It's so diverse.
But obviously the daily papers too have figured out. When they put a big banner on page 3 saying mortgage stress up or what's your property worth, people buy the paper. So obviously they want a headline.
Well, we all get it. We're all going to continue to get it. Nothing's going to change. But the thing that all of us, and we understand it, and I'm sure most people out there understand it too, you cannot generalise when you talk about property. But unfortunately, a lot of the commentators do. It's not like that. Markets don't go up and down. Prices don't rise or fall uniformly. It's much more complex than that. And I really get irritated at these headlines that say, this is what your property's worth. That is so wrong.
All right. So what would your advice be for the next 12 months for people looking at property?
Well, exactly what Tim said. Keep away from the media sensationalism. You know, there's too much of that going on. You know, obviously a flat market or a standard market doesn't sell papers, so we're either in a boom or a bust. And that's the message that goes out to the broader community. And Tim's right, it's not the message. The Australian property market, I mean, there's 15,000 suburbs in the marketplace. If we just compare 15,000 to say, you know, there's basically around 2,100 shares, we've just in the size of the suburbs, we've got a marketplace that's, you know, significantly bigger. And then we've got to identify one property out of around 9.1 million dwellings. So I think the message for people out there is obviously do your research. If you're in a position to buy, then consider looking and doing your research and working out what you can afford comfortably, not just for today, but also what's into the future. And I think the really important thing for first home buyers, the message for them is in the area that you're looking, if prices aren't moving, keep saving. If they are moving and they're moving quicker than you can save, it's not a bad trigger to basically say, I need to get into the marketplace. For investor clients that, you know, for people like Cameron and I deal with, then the best time to get into the market is when you can afford it. And then look at, you know, obviously what your overall strategy is in terms of your retirement planning.
And obviously getting advice too is important, Cameron. Obviously you'd advocate using, well, you use someone when you sell, use someone when you buy.
And Tim and I have spoken about this before. They're trained negotiators and we're trained negotiators. And I guess what we always question is that you will go to an expert to get your mortgage, you'll go to an expert to do your accounting, you'll go to an expert to get your back fixed, but you go and spend the most money you're likely to ever spend and do it yourself. I always find that very interesting. I think that there is people in the market who may potentially feel that an advocate is not genuinely out there to try and save them money. And there are advocates that don't spend other people's money well, but the majority of advocates in the market know how to negotiate and know how to buy property at a price that would be potentially lower than what the client could do it themselves.
In choosing an agent, I think it's most important. You do it on the basis of a whole lot of stuff, trust and all the other things. But you've got to get a very good negotiator. Because these days...
This is when you're selling.
When you're selling,
yep.
Correct.
No, both.
Well, in this case, the point I'm making here is that when you're selling, you've got to get a very good negotiator because people like these two fellas here are very, very good at negotiating. And that's why people should go to them when they're buying a property to get help. But the vendor, the one selling, needs to get a very good agent to be able to counter their skills.
Do you know any?
These two guys here, well, from our point of view, I can think of one. Fletcher's.
Yeah.
Yes.
All right. So we're all agreed. You need your expert advice. Where's it going this year? Where's the market headed?
Look, there's no doubt there's growth. There's no doubt there's growth in the right locations. We've had this, you know, plateauing that's occurred. We're seeing better stock on the market, and the indications are already there that there's, you know, we've had growth in the first quarter. So there's no doubt there's growth. The percentages is obviously, that's the crystal ball gazing stuff, but I think if we see clearance rates above 70%, then I'm not afraid to sort of call general eastern suburb markets in the range of 7 to 10% for the period. Is
it easy to keep people realistic, Cameron? Do you get people who just they hone in on those 15, 16% years and think that's what they've got to aim for now?
We recently did some evidence on properties doubling in value every 7 to 10 years, and we found some statistics from 1890 for the first sale, which was recorded in Sydney. That property today would be worth $181 million. And I can tell you it's not worth $181 million. But the fact is that going out and going to the market, those affluent suburbs are always going to perform well. At different times in the market, there's obviously more competition looking to purchase those types of properties, but the good properties that we've been at recently, that we've gone to auction with and or for a client, they've all sold for prices beyond what we thought they were potentially worth and would have been worth 12 months ago to multiple competition.
Tim?
I think we're in for a pretty healthy rest of the year. We've got an election coming, which generally sort of causes a bit of a hiccup around that time. There's no sign of that happening at the moment.
Change of government help?
Do you want me to be political here?
No, I just mean generally. Does it give people confidence if they feel that...
The short answer is yes.
Yeah.
Yeah, absolutely.
All right. Gentlemen, thanks very much for joining us. We'll look forward to the rest of the year to see how your predictions fare.
Thanks, Steve.
Good cardigan.
Thank you.
Next week we visit Dandenong and our panel looks at how to pick the right development for you.